Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, June 15th, 2023. It is 10:15 a.m. Eastern Time. I'm starting the video, so we're 45 minutes into the trading day, and I wanted to do this one because I think it's timely. I think we're, as I said, lately, same thing, kind of pushing upper limits. We've got divergences, long-term trend indicators that, well, those won't change until the end of the month, at least on the monthly time frame. But here, let's just look at the near term. This is a 60-minute chart of QQQ. You have the wedge. It's the same uptrend line on the 15-minute chart right here. There's your uptrend line, gives you its bearish rising wedge. Nice divergence. This is the kind of divergence I like to see, where you have a clean peak, separated right there with another peak. And all you need now to throw in the mix is that bullish crossover. And that then, in my book, again, this is just me, confirms that divergence because you've effectively put in a lower peak once you get the bearish PPO crossover. Until then, you have a momentum indicator that's still pointing up, and it's on bullish. So you can use the histogram. That's the MACD histogram. Let me park that one with the PPO histogram right here because that's my preferred proxy. There it is. So when that little green line, these green bars cross red, if it happens soon, and I suspect it will, then that's your confirmed divergence. Some people will use PPO crossovers as buy-sell signals. You can incorporate it into those automated trading programs, or again, it's just something I visually like to see. And I'd put a pretty good chance it's going to happen with the look of this divergence. In other words, the divergence is when you get them, and it's kind of just flattish lines, and you don't have that clean trough between. Those are the ones that have a lower chance of playing out. So that's it. And you can look at it this way. It's a 60-minute chart. We're back testing the wedge from below. So what did I say? It's 10:16 right now. First candle is a half-hour candle. Finalizes at 10 a.m. It's not really a full hour on the hourly chart. So we've got 45 minutes now, actually, as I speak. 43 minutes to finalize this candle. And, if things happen in a perfect world, you don't always get what you want. It's going to close as a red candle back below the trend line, which will just show this as a back test followed by a rejection. And as I like to say, the redder the better. And if you do get that, you're going to have that crossover. So that's kind of what I call micro analysis. May or may not happen, but if so, I'm going to add one more target here. I've given you little micro targets on the 15, but these are your targets: 35.70, 353.90-ish, and not just targets, also levels. If and when broken, will most likely lead to more downside. 347, and that 347 comes in with the primary trend line. So this is what I call my preferred swing target. Right here, you have the uptrend line and 347, I'm sorry. You can see over here, big, thick. This is the volume at price histogram bars. Hopefully you can pick them up in the video. I have them tuned down a little bit, but it's these green and red bars, and they come out to here. Then you have this big thin zone down below. So that is, I like to, first of all, it's a reaction low. That's why I had that level there. But it's also a thin zone, and those tend to act as support. So it's a big support. It would be from where we're at now. Remember, it's about where that other, it's the same target I gave you on the 15-minute chart, the 3 the other day. That's a 5.3% downside if hit. And then, like I said, that has the potential to, maybe change some things on the longer term charts. And then a much bigger, more powerful sell signal if and when this level goes. So my best guess would be rejection here, followed by a move down, little reactions at those targets. Minor, not ones that I would care to really game if you're swing trading. Probably get a decent reaction off the initial tag of the downtrend and that intersecting 347 trend line. Then if you break that, most likely you'll zigzag down, but we'll probably come and test the top of that trading range. So that's what I'm looking for. Now, this is a 60-minute chart. Let me show you the 60 of NQ real quick. NQ futures just rolled. I rolled them this week. So mine went now on the September contracts is the current one. You can see the same thing here. I'll zoom in a little tighter so you can see it. Again, I try to remember, some of you guys watch and gals watch videos on your phones, or that's going to be real tough. I recommend watch them on a monitor, but if you can. Uptrend line, bearish rising wedge, negative divergence. Again, either pans out or not. Certainly, we've had the market kind of burning through those shorter term time frame divergences for a while now. The daily divergence is still there. It's the only difference between now and a month ago. It's much larger. And we have this clean 60-minute. And you can see it's even starting to steepen right there. The slope of the divergence lines is downwards. The negative slope is increasing. So breakdown. Post-Fed back test, what I attribute 110, well, whatever, you can call it whatever you want, but the Fed, ECB, and of course I forgot, but they do that every time. They always do their rate decisions right after the Fed, then we can see what the Fed does. They hiked quarter point. That's popped the euro today in pre-market as soon as they did the hike. Now, keep in mind, it was widely expected they were going to raise rates a quarter point. So I think it'll get faded. I'm going to show you the euro in a second. I just wanted to reiterate, just like yesterday on the breakdown, this is the back test. And I told you yesterday, if you back tested that, you could continue, and that's what it is. It's a back test. So it's an objective short entry on the back test. If you get rejected here, that's what you want to see. You're going to want to see next minor support is 14, about 983, 14, 878. And then at that point, that was that pretty big level I was highlighting on the 15-minute recently. Remember, you have 1, 2, 3, and then finally a breakout there. That's pretty big support. You break that, I will put very good odds. It'll be a relatively swift ride down to the that initial swing target. Again, we're not talking a monster trade, certainly a counter trend trade. And I know from the comments on the site, probably most of you have given up shorting, and that's fine. That's usually when they start to work. So about 5%, 5.5% drop down to that level. Let me just measure it here on futures. Yep, there it is, same thing. And then again, a much more significant trend line. So that would be, my preferred scenario, something like that. And then ultimately, if that goes, now let's talk about why, that might morph into a much bigger drop. Okay, and this is important. This has to happen. Apple has these intersecting trend lines. I'm going over the top components of QQQ. I'm going over the 5 or 6 stocks that matter more than the next 2,000, 3,000, 4,000 stocks, however many there are in the universe of publicly traded companies. It's just these guys that really matter right now. They bring the market down, up or down with them. And that would be, so Apple has about 3% to the trend lines. And as long as it's above trend, you just can't get crazy short or bearish. But when it breaks that trend line, those intersecting, I have dual trend lines there. I've covered them quite a bit, but they both come in together. That's a pretty powerful sell signal. And even better if it breaks 176.15, because this whole thing here was a breakout above that previous reaction high. We consolidated below it. So those are the levels to watch for Apple. And again, the way it works for me is that's where I'll start to determine whether, that 5% pullback's all we're going to get right now, maybe go long, or, hey, hold on or wait for the next sell signal, or, again, sit tight. If you're a trend trader, we could blast right on through that support level I just showed you on the 5% downside target on the QQQ, and then you want to just sit tight. So that would be, you need those sell signals, or the Qs are only going to go so low unless Apple breaks down. Microsoft, best I can do for a trend line is this one here. That gives you this one violation back here I talked about. You have an impulsive breakdown and a back test as well. Negative divergences. You even have now the divergences on the RSI. Up until yesterday, it was just it was PPO divergence. RSI was slightly higher. Sometimes people say, okay, that's roughly flat, but you want to take it literally, then you do have the divergence right here on that back test from that previous high there. So what does it need to do? First of all, an impulsive rejection off the trend line. That would be the first sign. Again, this candle's still this is the daily candle. Let's see how it closes today. And then a break below that reaction low right there. Alphabet, I've gone over this quite a bit. You have a pretty big, you have this trading range right here. And the bottom of that trading range is, my level there says 122.60, but you can see I have a line here. It's about 121. Call it 121. That's, to me, the big level. Okay. not only does it take Alphabet out of this recent trading range right here, right? Bulls view that as high-level consolidation, nothing more than healthy consolidation after a big run-up, and it's certainly big knowledge. If you break to the upside, then sure. However, what I see, I see these divergences right there, negative divergences that say we're likely to the next, next tradable trend out of this range will most likely be to the downside. That's what. But you have massive support. This was big resistance, 122.60, in my opinion, because it was this entire multi-month that went from April of 2022 all the way until it broke down in September. A very well-defined trading range. All eyes would have been on that at the time. Once you broke it, you back tested a couple times and then got rejected. You failed again there. A brief pop. There's a false breakout, and false breakouts are very bearish when they happen. So when it did that, if you bought that breakout and you held on to it, you lost 18% just a matter of weeks. So that's what happens. And finally, that established, even though it was a failed breakout, it established a new set of reaction highs. So when we did pop it, we consolidated on there, but then that set this really as the new resistance level. So you had another trading range, and boom, that's when you broke out. And I talk about these trading ranges acting like energy building in like a coiled spring. And when they're tight like that, boom, you see a big green candle. That's the breakout candle. So it ripped up. Anywho, we're in another trading range. So if we break to the downside, it's a downside break of this trading range, which I just talked about, and that typically will send you down minimum to that support level, in my opinion. But it would also mean that this whole thing here, this breakout, not my circle tool, this whole breakout was a failed or false breakout above that resistance level, and that's pretty bearish too. So it has not happened. So again, I'm saying the same thing over and over. It is not an all-in short moment at all. In fact, if you're a bull and you're long, you buy support. That's what you do. You expect these divergences to be burned through or negated, meaning taken out. And it's very objective to go long here as a bull with a stop somewhat below. Or if you're a bear and you want to, short Alphabet in particular, you don't short right now. You don't short at support. You short on a break of support or a rally into resistance. All right, so that's the top three. Amazon. Here's your uptrend line. So what I see here, just draw it out. I've got a lot of lines. There's a longer, more significant uptrend line, which is a target. There's our divergence line, i.e. negative divergence on the indicators, and building. There's our minor uptrend line. So break of that minor uptrend line will likely bring us to the larger uptrend line below. This is what it looks like on a 60-minute chart. So we're right there. And it is another big market-leading stock, big component of QQQ that is above trend. So this is what you need to see. Although I started the video saying, yeah, you can make an objective case, short, backtest trend line. But as I told you before, the problem with shorting backtests of wedges, rising wedges, is that trend lines come in every day, every minute, every second, technically at higher and higher levels. And you can keep backtesting. And then finally reverse. So you kind of want to see that big reversal candle. And then sometimes there's no guarantee if you break down and backtest that you're going to reject, you can regain it. So like I said, it is still kind of to me, for swing partial short position time. And these are your all-in moments when the majority of these guys break. I have alerts on all of them. I have alert on this trend line, alert on those trend lines I showed you on Apple, alert on that level I showed you on Alphabet just a second ago. And whether it's today, next week, or 3 weeks from now, if I get one firing off, then another, and in close proximity, I get and that's what I can almost guarantee it will be. It usually is. They all fire at once. And sell programs are hitting, and that's when you need to jump in and go all in quick. That's what I do. Now, otherwise, if you sit there and wait till the end of the day, there's a lot of hot air in this market. When these break down, and you have the majority of these top 6 or so stocks I'm covering right now, if 3 of them, let's say half or even a third of them break down in a day, by the end of that day, QQQ will probably close down 3%. So, you don't want to wait too long. And there's your support levels along the way. NVIDIA, NVIDIA, king of the AI hype right now. Big trading range, just like Alphabet, well defined. That's 375 right there, and not even close right now. But you do have the negative divergence, so no sell signals. Divergence not a sell signal. In fact, it's not even at resistance. So can't really make a case to short, but it's going to take a little ways to get down there. And percentage-wise, that's about 13% just to get down to that support level. But if and when that goes, what I could see happening, let's say, for example, we get those sell signals today on Apple, Microsoft, Alphabet, QQQ gets rejected off the wedge. We start to, and the machines flip the button from buy to sell, and they start selling. You could see a gap down. Well, it'd be a huge gap on Monday, but sometime next week. And like I said, I'm looking, for potential gap down below the island. Again, it's not going to happen today. Probably isn't going to happen on Monday because it'll be a massive gap down. But if it happens soon, that'd be an island cluster top. Very high probability reversal topping pattern, not just a short-term pullback. Let's get 5-10%. No, a trend change. But that's a lot that has to happen. And we don't have to have a gap down. You can just go down, test it, and then break down below it on a single candle. And then if it does, it's going to want to probably backfill at minimum, backfill that big old gap it put in right there. So that one's got a ways to go. Tesla trendline break, sell signal. This one's on a sell signal on that daily. I wonder why it doesn't look like it here. I guess I have my trend lines drawn differently. No, okay. Oh yeah, that's what it is. Go back to the daily. It's a red candle because we're down right now, but we're back on the trend line, so not a sell signal. This is a daily chart. All that matters is how you close the day. There's the trend line. I cleaned it up. You can see it comes in off that low. And so we're back above it. And that's what you can also see on the 60-minute chart. We had a opening gap down. They bought it up. And so that needs to go. We need to see a solid move down through there. And again, not just Tesla. It's not going to bring the Qs or the market down by itself. It needs to have help with Apple, Microsoft, Alphabet, Amazon, and NVIDIA. And like everything else, it has a big old gap to be backfilled. Bottom of the gap is right there. If you get the sell signal, you're talking backfill a gap be a 7% drop in Tesla. And that would mesh with that 5% initial swing target on QQQ. I know those numbers don't add up, but you can remember your one stock. This is a higher beta stock within the NASDAQ 100, meaning it tends to move up and down more on any given day. So that is right in line. That would be a target. And when QQQ, if and when hits that pullback target I just gave you, that the uptrend line on the 60-minute charts, that would probably coincide with a backfill on Tesla. And then, of course, if that goes, then that leads to even a bigger downside, more downside. And then Meta just crawling on that line. I put this one as a trade setup. It still is very much a trade setup. And of all the things out there, one of my favorite. I mean, there's a lot. Like I said, Alphabet sitting on that shelf of support. That would be pretty bearish. But Meta, if it breaks that trend line, very, very well-defined trend line. From where we're at right now, you've got about 11% to my first target, 19% to my second target, and 28% to my current final target, which is T3. If we even start to approach T3, depending on how things look, and again, it has the potential. If we get there, that means the Qs are going to be down quite a bit. And we're probably going to then have some longer term sell signals, on the daily charts, things like that. And so I will most likely open that up. But I leave these out here again, and I know I'm speaking to probably very few people who are listening right now and even interested in shorting. I get that, but I do what I do, and I trade how I trade, and you guys do what you want. But if you are, you share the same mindset, or even you're open to the potential that we could have this, like I'm talking, another, 30 to 50% drop in the markets in the next, in the coming months, over the next year or so, then that's a very, very doable very doable target. And like I said a million times, people don't get it. They just can't, a lot of people can't wrap their head around. It's just a numbers thing and relativity, putting things in relative terms. So, Meta from this low right here in 2022, 212% rally, right? And you're thinking, oh my God, or 200%. But all that is right now at least, a typical retracement of a initial leg down on what could be proven and over time a much longer, bigger bear market. There's your initial drop. There's your fibs measured from high to low, and that's what that is, right to the button. And it's been there for the last 3 weeks, right on the 61.8 Fibonacci retracement. Because that's what happens when you drop 77%. You put it in dollar terms. If you had 100 shares of this, you had $39,000 in Meta, and then you drop down to 87,000. So your 87,000 or 8,700. I'm sorry, 8,700. Then is now only worth 27. That's the mathematics of this, and that's how again I view things looking at, and that's why every now and then loop back to those long-term charts, those monthly, the weeklies, and it just helps you kind of see the bigger picture. And again, it is what it is. There are no sell signals, but there is a very clean, well-defined uptrend line, and that's it. So like the others, I have a price alert set there, and I always say there's no guarantees in the stock market. Anything is possible, but I don't speak in possibilities. I like to speak in probabilities. And so the probabilities when I get of those 1, 2, 3, 4, 5, 6, 7 top weighted market leading stocks I just covered, if 3 of those break down and fire sell signals, and I've got the Qs and the SPY. Let's just not forget that. The S&P 500 needs to go as well. That's the stock market. There's my uptrend line right there. Needs to go. Same thing. Nothing more than just a marginal new high, divergent high, and ES, your S&P 500 futures. There's your trend line. Let me zoom in a little closer. So we never got a sell signal on that yesterday either. We just after the FOMC announcement pulled back. There's your uptrend line right there, nice and clean. There's your big divergence on the 60-minute chart. There's your divergence line, and you also have a couple reaction lows there right below the trend line. So this is what I call the BOD, or benefit of the doubt support level. If you want to be safe, you wait to 43.81. That's 43.81.75. Wait for that level to go, and it would just again be simply another but a big check mark to make the case to be a full short position on the markets, whether you're trading SPY, QQQ, or small caps, or any combination, or mid caps, or any combination thereof. Okay, almost done. Let me just loop to the euro. So this morning, ECB rate hike. Again, it was anticipated. Yesterday, I told you my views that we had a breakout. I had been bullish and long the euro as proxy via silver recently, and that was the breakout. But then I said, look, we have these divergences. There was positive divergence here. Carry us up. This is support. When you look at the daily chart, I have big, and this is the same level I had before. That was our breakdown point right there. Remember, we had a negative divergence, bearish rising wedge, and that was helped support the case to short gold, silver, GDX, and or get out of those longs and go short back then. And that was a downtrend, and that was exactly when gold and silver fell. That's exactly when they bottomed. They went up for the reasons just showed. Then they took out. Remember, they had that little area of consolidation I showed you on the 60 right here. Right here, this resistance zone broke out of that, and that was another buy signal. And now we are coming up on big resistance. Again, it was this support shelf right there. The breakdown coincided with the break of that horizontal support plus the uptrend line right there. And we're rallying back to that. PPO is still down below the zero line in bearish territory, and we are coming off that big divergent high, negative divergence. So that's still very likely we get rejected there and then go down and hit. Remember the measured target I gave you yesterday, this purple line is the measured target of this big bearish rising wedge right here, that uptrend line with that divergence line, widest part of the wedge added to where it breaks down, gives us a measured target right there. In yesterday's video I showed you the unmistakable, very tight positive correlation between the euro and both the stock market and gold and silver. So if, and it's a big if, bulls want to see this. If this happens, that's going to most likely provide a tailwind for stocks and for gold and silver. And if this happens, then that's most likely going to provide a headwind for the stock market. In other words, bring the stock market and gold and silver down with it. So we'll see which way it goes. Like I said, an initial pop because we got the quarter point hike from the ECB. But let's see if how much of that juice is left, again, because it was widely expected. Here's that trend line I told you yesterday as well. You have to break that uptrend line to trigger a sell signal. So let's watch that. So, right there, you could short the euro. You could exit gold, silver if you're still in that trade. Or if you want to take a shot at shorting them. Same thing with the equity market. So this is probably about as much upside, at least I think, that we have. Rejection there will certainly help to support that case, keep these divergences intact. That's not a sell signal. What would be a sell signal then after that would be a break of the uptrend line and then go on and take us down to the target I gave you before. Okay, that's a lot, but kind of just focused in there. Still liking the energy. I told you natural gas and crude as of the other day. Crude starting to firm up. And so those are, other things. I know I do these videos. Most of my videos are dedicated to the markets because everyone follows that and you want to know the ebb and flow, the bigger picture to then, what sectors. Okay, if the overall market looks bullish or bearish going forward, then you want to start looking at individual sectors and stocks that align with that. Natural gas, really it's a daily chart that looks really nice here, firming up with that big, positive divergence. It's like the stock market in reverse. So the things that I like on the long side right now are the VIX, natural gas here, crude oil to a little bit lesser degree, but still I'll give you that 60-minute divergence yesterday. And then short as of this point in time, I think it's a good time if you, to either tighten up stops. Here's my gold. There we go. Here's my gold 60-minute chart. So it's not, like I said, the euro hasn't reversed yet, hasn't hit that level. I'm going to acknowledge that we just put in an even larger. Remember, this was, it was bullish along the metals here recently. That was the bullish falling wedge on gold. Remember right there. And silver was my preferred proxy, and it outperformed. You got more upside on that. You had the breakout back test in gold, and what it did, it just put in a new low, but a marginal new low, and still an even bigger divergent low. So it's not, I want to say this, I'm not short in gold and silver right now. Gold also can catch a flight to safety bid and sometimes offset that impact of the euro or the US dollar. So I did want to point this out. And so if you're in the gold silver trade, at this point probably stops between the recent lows, and also watch that price action in the euro and US dollar. There's E7 euro futures. I don't have the resistance level marked here, but there's the uptrend line on E7. So if that breaks, then and then especially that 108.41 level, that was the breakout right here. Remember, there was a breakout back test and we had resistance here. So boom, boom would be your two sell signals on the euro, and that again would be bearish for gold, silver, and the stock market. And then finally, silver was the trade. Okay, and yesterday I mentioned, the change in the outlook on silver and the dollar and all that, and it broke down. So that's when I got out, and I don't, I'm not back in. I'll watch the euro, but I think I also can make a case here to make a case to short it, but I'm not, because I just showed you that divergent low on gold. But we are back testing the trend line. That was pretty much your sell signal yesterday. And, watch for that rejection there. I do not have the positive divergence on silver that I do on gold. And so that's why I'm kind of wishy-washy on my convictions. Like I said, no position for me right now, flat. But those are the things to watch. So let me wrap it up here. We'll see what happens tomorrow. Again, today's only Thursday, so we have one more trading day in this week. And let's see where we close today. Let's see if we can, we're still pushing those upper limits of the back tests of the wedges and all that on the indexes. And we're still above trend on the all the big fangs. And that's what I'm watching the most. Like I said, it's you just can't get aggressively short. And if you want to go long, you can do that. You can buy those pullbacks to those trend lines as long as they work, but they are getting very long in the tooth. And the fact you have those divergences just make it not objective, in my opinion. The RR, the risk reward, the amount of profit potential compared to the risk of downside loss, especially being caught on the wrong side of a gap that could take you down below those trend lines, and bypass any reasonable stops. That's what I mean by the RR, despite the resiliency of the trend. Okay, we'll wrap it up here. This is Randy Finney with Right Side of the Chart. Have a great day.